Good morning guys. Morning Zeems, morning Tristan, Zypher, TJ, how are you all doing? Good morning. Nick, how are you doing? Welcome. Some really nice moves already this morning, guys. On GJ, there was a nice counter trend sell. Didn't get involved in it, but it was below this sort of 157.063 level and continued down quite well until about 156.900 and then rejected from there. Easy, what's up, my boy? How you doing? Hope you had a good birthday the other day and a good celebration. I'm just going to give it two or so minutes, guys, and then we will get into a full breakdown of gold and GJ. Just quickly check some fundamentals that we have today. Oh yeah, it is important to remember, guys, today we do have a yen, a Japanese bank holiday, so the yen could have a lot less volume, so any yen related pair may have less volume than previously expected. Stanley, good morning, welcome. So obviously that is important to remember. We've had this news, all these numbers have come through already. The preliminary GDP has come through, quarterly bad numbers. Didn't really change price too much. So that's all too good. You can see we had a lot of light impact, low impact pound news. Also nothing too serious, nothing to worry about. We do have some medium impact USD news coming a bit later. So gold, obviously anyone who is trading gold, it could possibly move. If you guys did trade CPI yesterday, this was our CPI candle. You can see it was just one of those that whipsawed a little bit. So had a strong bearish push and a strong bullish push. We did manage to in Discord catch the bullish push and some caught both. So well done to anyone who did successfully trade CPI. It is quite interesting. Morning Sharif, welcome. Okay, so let's do I have broken these down already, but let me just remove the drawings and we can start from scratch as well. You can more or less see what I'm looking for. Let's start with GJ because obviously we have open coming up in 10 minutes. Again, guys, the possibility of less volume is likely. So we base market structure from the weekly. If we're looking at the weekly candle, we are past Wednesday afternoon now. So we look at the current weekly candle. You can see that that is currently bullish. We are at the moment sitting on a level of weekly resistance. Very important to remember. So this is where we could start seeing some rejection. Obviously, what we need to see if we want to take some sells is the lower time frame market structure flip, because the 30 will always go first if we're looking at our main market structures. So we'll go the 30, then the 4 hour, then the daily will flip, and then the weekly. Well, the weekly, obviously, because we base it on one candle, can flip a lot sooner than, let's say, the daily, for example. So we are bullish market structure on the weekly. On the daily, we are also at a level of resistance, and we closed on that level of daily resistance. So that's very important to remember. Our market structure on the daily is still bullish. This was our high point which created the high. We never exceeded that, and we have not created a new high yet. So we have maintained this bullish market structure since the 20th of October 2021. So we have been bullish in market structure because that was our high which we had created, and we did not exceed the point which created the high. If we're going to look at more recent price, which we need to do, we need to understand obviously the levels that we're at. So this resistance level, we're also, yesterday's daily candle made a very, very strong push. So again, this is when you start seeing things like exhaustion, and that normally comes on the lower time frames. So on the 4 hour, we can start obviously marking out some zones. Sorry about that. We are sitting, or we have formed 4 hour level of resistance. We don't have any 4 hour supports that have formed recently. We are trying to, well, we've left the bottom wick on the 4 hours, so we are trying to come up a little bit, so could possibly form a level of 4 hour support around here. You'll see when we drop down to the lower time frames, we will have some 30 and 1 hour support at this sort of level. This could be our exhaustion. So obviously we broke through this level of resistance. You can see now we have more or less tapped into it, and now could possibly form some 4 hour support and retest these sorts of levels, the highs up here, because that's how price moves in an upward trend. We create a high, create a higher low, retest that high, create a new high, high, low, retest that high. So that is your uptrending market, and that's why we always try to get buys at these sorts of levels, these levels and these levels, because you're trying to buy at the lowest possible price in an uptrending market. Market structure, if we're going to look at market structure on the 4 hour, obviously we are bullish. This was our high. Now we need the 2 or more candle pullback. 1, 1, 1, 1, 1. Here's your 2 or more candle pullback. So we will only be bearish below this 155.083 or so level around there. So market structure will remain bullish on the 4 hour, the daily, for quite a while. Now we can start looking at some more zones to mark out if we want to find some earlier buys and sells. I personally wouldn't really be looking for sells unless we see some strong candle confirmations, just because of how bullish market structure is. But if we go to the 30-minute time frame, this is where we're going to be looking for our clean candles. Now, this is that support level I was telling you about that we were going to identify within that 4 hour wick. So you can see we've just formed that, and now we can also identify some resistance levels. So if we look at current price right now, we are currently coming up to a level of resistance. We have formed that. And if we break above that level, how much clean range do we have? About 15 or so pips. So this could be early buys up until, if it would let me select the tool, up until about 157.271. Because once we break into this range, we have clean candles to the left and we won't be respecting a level of resistance. So that's highly important. If we then get above these levels, I'd be looking for some very easy buys above 157.422, that sort of level. Just because if we look to the left from the amount of clean range which we have to trade into is, it's enormous. So this should be easy buys above this level. What you can do when you have such a big range is look for the higher time frame candle closes. So we could look for a nice strong bullish support that forms at this current level that we're at. So we have now flipped bullish, this 4 hour candle, but now we want to see it close bullish. So there's still another 2 hours and 6 minutes until this candle closes. So that gives that opportunity for price to push up as much as possible and form that strong bullish support. And then for us to further continue bullish and get above these levels to retest the highs. So our market structure as well in the 30-minute is still bullish, although we have had this very strong bearish sort of push. This is all counter trend and this is more or less your pullback. The reason we're still bullish is this is our high and now we need a 2 or more candle pullback. So we haven't identified that. Those are both separate ones. So those are all classified as pauses. And here's your first 2 or more candle pullback. So we're only going to be bearish below this level. So anything down until this level is counter trend. And what that means is there's going to be plenty of buying opportunities there. Say we do pull down to this level and respect that market structure, we can definitely see ourselves coming back up and continuing the bullish sort of run that we are on. We do need to understand that it is Friday though, and there is a bank holiday, so we could have a lot less volume on GJ just based on those two factors. We are also sitting on a daily level of resistance and we are rejecting weekly resistance as well. So we need to see how this weekly and daily candle closes, and that's going to give us a very strong indication leading into next week where we could be heading. So I hope that made sense. A decent amount of information there, so I hope that it does all kind of add up. And yeah. Morning Zeus, how you doing? Welcome. So if you are going to be looking for this further bearish continuation, if we're looking at risky sells, below 156.912 is obviously an option because we do have a lot of clean range to the left. What we need to understand though is when you're taking a counter trend trade, we aren't always going to go to the support level below the broken support level. What we might do is reject at this resistance level, because remember in an uptrend, often resistance turns to support. So we may come to this level over here and react and create that support, and that's our retest complete. So that's why it's highly important to remember that we need to take into consideration what the overall trend is. And you can see after a day like yesterday, it's very likely that all market structure below the daily time frame, and including the daily time frame, and in this case we have the weekly as well, is all bullish. So taking any sells at this point would be counter trend. What we do need to understand though as well is there is something called exhaustion, whereas once we have such a strong push, we are going to have a bit of a correction to then continue that overall trend. So we need to understand what's a correction and what's a pullback, and then we need to understand as well what is trading with the trend. So trading with the trend would obviously be trying to find buy entries at these sorts of levels because it's early on, not too high up. We're not buying at the highs, but we are buying at pivot points. So this right here could end up being a pivot point if what we start doing is forming some 4-hour support. So we still do have 2 hours left until that 4-hour candle closes, but we also have London Open coming up now. Just be wary of lack of volume. So we obviously haven't had good London volume in a very long time, especially at London Open. However, we do obviously need to take into consideration that the bank holiday is not going to help that situation at all. So we may have another terrible London Open. But let me just type in here so it's nice and clear what we will be looking for. We also want to wait for those candle closes, guys. Very important, especially on a day like Friday. And those are risky because it is counter trend. Let me just see how much range we have here. Yeah, it's only 10 pips. So I actually wouldn't be looking for, you know, separate entries above 157.271. But what I would be looking for is buy continuation. Above this sorts of levels. That's very similar to what we had yesterday. We had a lot of clear range, broke through it, had the buy continuation. It might have actually been the previous day as well. And then we just went straight through those zones. Obviously, we had the clean candles to the left, which definitely helps. After London Open, we can get into gold. You can see gold is trying to make a bit of a bullish push now. We have maintained that bullish market structure. So if we do manage to get above this level over here, I will be very interested in possibly retesting these sorts of levels. We do need to remember as well though on gold we have had a very strong bullish push, and we have formed now daily resistance after tapping into previous levels of daily support. So very important to remember we could start coming down, but if we can as well, it would be nice to continue with the overall trend. We just need to see how much exhaustion we're going to have, and is it going to be mainly on the lower time frames, and in that case we would have had all of this exhaustion. Or is it going to be, you know, a couple of bearish days in a row, which we do sometimes tend to see. So it's a very bad pre-London candle. You can see it doesn't indicate anything at all. Normally we like to see a catalyst candle, and in that case we're going to have a strong candle close, which is either bullish or bearish. In this case we had a doji bullish candle, which doesn't tell us much at all. You can see we are coming down quite a lot, but there isn't really a confirmation for many entries. Obviously if you are going to be taking impulse entries, that would come below these sort of wick levels. To be honest, I'm not a fan of impulse entry, so when it's a counter trend impulse entry, that for me is even less likely to play out. So, you know, I normally tend to stay away from those. If you are feeling comfortable enough to take an entry below these sorts of levels, again, there is clean range to the left, so by pure technicals, it does make sense, but against market structure, and in my opinion, that does not make sense. So just be careful of being faked out in this situation. I won't be taking sells. I can confirm that much. Again, I'm happy to see these sells as well. So if we do end up coming down to these sorts of levels, I won't mind seeing that at all. Even if I do miss this overall move, you know, I'm not going to be concerned, because if we do maintain that market structure, it's just going to provide us with further bullish moves later on. So if we do start forming some support on these sorts of levels, what we're going to be able to do is scale into moves on the way up. Sorry guys, I didn't actually look at Telegram to see if you guys had posted any charts or anything like that, but let me take a look now. Stanley posted a chart. This is your gold chart. Yeah, I had a gold chart marked out just now. I just did remove the drawings, but very nice. You just need to watch out as well for this rejection wick on the left over here. Same buying zone is exactly what I'd be looking for. Bullish market structure, perfect. And I like how you're looking at this sort of support level as a possible rejection area as opposed to all the way at the top here. So yeah, perfect gold chart. Very nice, Stanley. Just wait for those candle closes and you should be more than okay. We also have your GJ chart, also bullish. You have the 30 minutes as bearish. I see that's because you do have a 2 or more candle pullback here. I think we're just using different liquidity providers. I'm using Forex.com. You are using Under. So by your chart, that is correct because you had a candle close below that 2 or more candle pullback. Just on mine, it is obviously different. I don't have 2 bearish candles, meaning for me, we are still bullish in market structure. So obviously that is where it's just open for interpretation. Other than that, the actual marking out of the chart is perfect. You're looking for safe buys above 157,400. Perfect. You've got a nice clean range there. And sells below this level down here, which will also give us some market structure flip. So as well, great. Given the time this candle is forming, I would expect the candle to come down and mirror the candle on the left where we see a clean candle. Yes, I see that, Sharif. There is obviously opportunity to mirror this clean move that we had up. What that would come in is obviously the form of just one strong bearish candle, hopefully, and that could be this London open candle. Again, guys, I'm not in the cells. I did not want to get involved in this sort of setup. Much rather wait for the confirmation, because at the end of the day, guys, if you are only looking to take 1 or 2 trades a day and you see this as an opportunity but you're not comfortable enough with taking the opportunity, what you need to realize is that throughout the day you will see something else, something with more confirmation, something which you feel more comfortable executing on. And in that case, rather go for the high probability trade than this, which is an extremely low probability trade. All you have in this case is clean candles down to here. Other than that, the confluences are all against you. You have market structure, which is bullish. So obviously taking sells is not ideal. You don't have candle closes. What you do have is London volume, which recently has been bad. So, I mean, if you did take the sell based on the break of these wicks, you would have been perfectly fine. You can see that we have moved down 16, 17 pips. So by this time you would have secured. So congratulations if anyone did take the sells. But just not my sort of setup. I'd rather trade safely than be sorry about taking a move that I didn't feel comfortable with. Balas, good morning, welcome. Let's get into a full breakdown of gold, because there are some possible opportunities on gold. Sorry, I'm just checking what we could have on our hands here. Okay, if we're looking at the weekly time frame, obviously we did chat about this yesterday, and the news definitely helped us get to this sort of weekly level, which we're looking at retesting. We still possibly can come up a little bit further to retest the proper high that was formed on this weekly resistance. But at the moment, we have tapped into one of the resistance levels, which will be a resistance level on the lower time frame, and we do seem to be rejecting it. We are currently bullish in market structure on the weekly time frame. If you look on the daily time frame, obviously yesterday we had that decently strong bearish candle, but news obviously impacted that heavily. You can see that's why we broke the previous daily high as well as breaking the previous daily low. So obviously that does not help us at all, because it is kind of mixed sort of signals. We don't know if we are respecting highs and if we are respecting lows and not highs, like we did with this candle, and this candle. It's a strong indication that we do have that bullish momentum, and it's very strong. But as soon as we're not respecting highs and we're not respecting lows, again, that is kind of mixed sort of indication as to where we're going to be heading. So that's where we need to take into consideration our market structure. Market structure on the daily is still bullish. We need to remember that. And the reason for that is this is our high. This is the point which created the high. We have not exceeded that. And by what I mean by exceeding that is we have not got a candle close below that. You can see we wicked below that point, but we did not get a candle close below that point. So market structure is bullish on the daily and the weekly. If we're going to look on the 4 hour, this way we can start identifying some zones. We also can identify our market structure. This is the high. This is the point which created the high. We are bullish until we exceed 18.15, roughly that price. So obviously you can be more precise with it, but for now we know that we are strong bullish. We're also coming down to a previous level of resistance. So this is almost our break and retest to continue that overall bullish trend if we do form that support on this level. So that's obviously what we want to see. You can see we can mark this out now because we know that on the lower time frames there will be some support that is formed there. But at the moment you wouldn't class this as 4 hour support just yet because the candle has not closed. If we're looking on the 1 hour, you can now start seeing we have formed that support. So we have the 1 hour support, which has tapped into a previous level of 1 hour support and rejected it, respected it, which is great to see because that's what you want to be doing in an upward trend, is respecting supports and breaking through resistances, right? So if we also look at our resistance levels, we have a resistance level at 1827.73. The reason why this is a significant resistance level is because if we get a candle close above this level, we have clean candles to the left. Now that, as well as our bullish market structure, is a strong indication that, okay, we have the clean candles, so that's clear price action. We're not respecting resistance. That's another confluence, and we have that bullish market structure. And that will go as well with forming our 4 hour support on the level, previous level of 4 hour resistance. So that's your break and retest. That is a strong indication that we can then look for some entries and scale into moves above these sorts of levels. You're buying at a pretty decent price, I would say above 1827. What we obviously need to wait for is a candle close. Now market structure is quite tricky on the 1 hour in this situation because this is our high which we had created, and we obviously want our 2 or more candle pullback. But you can see this is our 2 or more candle pullback, and if we're going to include the wick, which we have to do, then we have not exceeded that point. So we maintain that bullish market structure. The only reason that this candle is like this is because this was CPI's candle. So CPI's candle whipped down and whipped up and then closed bearish. So that becomes technically our point of market structure transition. So we will only be bearish in market structure below that level. And then why does that play into this whole sort of overall picture? Because if we get below this level, we also have clean candles to the left and we are breaking through a level of support. So that will play into the possible continuation, bearish continuation, if we do decide that, or if price does decide that that's where it wants to head. And you can see on the 30-minute we have the clean candles. We just do need to be aware that if there's a wick here, it's important to take that into consideration because we need to see that candle close. Again, if we are going to look at the buys, I'd like to see a candle close above 1827.73. Clean candles to the left, forming supports on previous level of supports. You can see we respected the support level on the 30-minute and the 1 hour, which is great to see. And we also have clean candles to the left. So I will be looking for entries above this level, but not just if price breaks into it. I want to see the candle formations and the candle setups. So obviously I'm looking for a 30-minute or 1 hour candle close. Those are high enough confirmation timeframes to then be looking for buys, and then we will wait and see. Could you not ignore that high as it was created due to news? No, we can't, because at the end of the day, that is the high. We can't say, news created this high, that means it's not a high. We have to take this into consideration. That is the technical high. So what I would be more lenient with is, do we take into consideration this as the point which created the high, or do we take it as here? But for me, if you're going to play it safe and we're going to go by the technical way of doing it, we take into consideration this wick, meaning that we are respecting that market structure, that bullish market structure. So again, waiting for this candle close. We want to see, well, we have seen now that we have respected 1 hour support, but now what we want to see is us not respecting 30-minute and 1 hour resistance. See, now this is what I was talking about, how we have resistance. We've now tapped into that level of resistance, and now we're rejecting that. That is precisely what I spoke about just before this sort of move happened. How we don't always, when we break through support levels, if it's counter trend, head to this support level. What we'll most likely do is tap into a previous resistance level and form some support, even if it's on the lower time frames, because that is essentially your break and retest. So you can see we are forming some 5-minute support on a previous level of 5-minute resistance. So that's why it's important when you are going to be taking counter trend trades that you are very aware of certain key levels. And in this case, this was a very key level, which we had spoken about. This level of resistance. And now we are coming straight back into the range. At this moment, gold definitely looks more enticing than GJ. Sorry, I've been talking way too much, guys. If you haven't already, please do leave a like on the stream and subscribe if you're unsubscribed. It is free and I do appreciate all the support. As well as if you haven't joined the Telegram, the link is in the description, and follow the Instagram, that link is also in the description. I haven't put the Discord link in the description, but if anyone is interested in joining the New York sessions, which happen on a Tuesday and Thursday, the open ones, that is, this will be the link. I've just put it in the chat. So if you guys want to join that, anyone who is in chat who isn't already, most of you guys are already in that Discord, so then just ignore that message. Feel free to join. And yeah, we do trade. Some days we'll do the New York sessions, and it's quite nice. It's a very open sort of environment, so if you have any questions you can ask away. It gives me a much better chance to chat to you guys individually rather than over a YouTube chat or something like that. So just waiting for, let me just put it in here so it's clear. Potential buys above 1827.73, around that sort of level. So that's going to be, obviously, with the trend, we're buying at a nice price. Obviously, we don't want to see this resistance respected. What we want to see is a nice strong 30-minute candle close above that resistance, and we want to see even a 1-hour candle close would be a really, really nice sort of confirmation, because obviously the higher the time frame you go, the stronger the confirmation that you have. So yeah, looking for those potential buys above that 7.3 level. If we're going to be looking at sells, we are going to be able to find some possible entries below 1821.40, but it is going to be counter trend, so it's going to be a lot riskier. That's below 1821.40, so please do be aware of that. And the reason that it's risky is because you are trading against a trend. You can see that straight rejection, which we were talking about just now on GJ, something definitely to take into consideration, as we were, if you did take these impulse sells, it was going to be against the trend. So now we can see ourselves hopefully get up, pop up above this 157.119 level, and then we should have, you know, pretty decent, depending on how our candles close and our candles form. If we're going to be looking for entries on the 30-minute, 50-minute, or 5-minute, we're going to need to see those candle closes. Otherwise, if you're going to be looking for the much safer sort of entries and the safer levels to be taking trades at, wait for price to get above this 157.422 level. We have a lot cleaner range to trade into. It's going to be a much stronger confirmation as well, because by that time this 4-hour candle will be strong bullish. So you can see if we get above this level, that 4-hour candle is going to be a lot stronger, and we would have also, hopefully, with the next 1 hour and 14 minutes around there, we should have our 4-hour support, which is formed. And then you can see, based on this wick, we have then retested this previous level of 4-hour resistance. Let me just, drag this out. So that is your support, your resistance turning to support. And then that's your break and retest confirmed. So that's what we'll be looking for. Entries are going to hopefully be at these sorts of levels and continuation at these sorts of levels up here. If you guys do have any other pairs you want me to check out, have any other questions, please let me know and I'll try my best to help out as much as possible. Gold is still rejecting 1827.73. So at the moment, we don't have any confirmations to do anything on gold. Currently, I would say this is more or less a no trade range over here. You can see very choppy price action. We would much rather be moving when we've had nice clean moves like this. So trading into the clean candles is going to make a lot more sense. So definitely be aware of that. Yeah, otherwise not much else to do on these pairs at the moment. Don't try and trade the range. You can see on GJ as well, this is most definitely a no trade range. So definitely don't try and get involved in anything within this current range. You can see we have a support level right here. We have a resistance level right here. It's definitely not enough range to trade in. So please do be careful of that. You take a look at US30, yeah, no problem. I'll do a top-down analysis on US30. I think this is the best one, this currency comp. Okay, so weekly we obviously are currently bullish. This weekly candle is very weak bullish at the moment, which tells me on the daily we have just had a bearish day, or started off very strong bullish and then started coming down towards the end of the week. You can see, let me just see the levels we're at. We do have obviously potential to come up a little bit further. We have been respecting weekly candle lows and we haven't been respecting weekly candle highs, which again, that's a nice strong indication of the direction you want to be moving. At the moment, I can identify a daily support level at that level, and then obviously we've just created daily resistance. If we break below or above either, we have clean daily candles to the left, clean daily candles to the left. So that is obviously going to be what you're looking at if you're looking at the higher time frames. The market structure on the daily, this was our high, point which created the high, you have a 2 candle pullback right there. So then this becomes our low, point which created the low. So we are bearish in market structure based on the daily time frame, and our transition of structure will be above this 36524 level, roughly around there. If we go look on the 4 hour, we can obviously fine tune our zones a little bit more. You can see at the moment we are trying to form some 4 hour support on a previous level of 4 hour support. So we are respecting the support level, which is great to see. What that normally indicates is if we are in an upward trend, don't know what these are. If we are in an upward trend, then we can definitely continue, especially if we are going to respect this previous candle low on the 4 hour. Market structure on the 4 hour is bullish. This is our high point which created the high. We have not got a candle close below that point. So we are still bullish in market structure on the 4 hour, bullish on the weekly, bearish on the daily. If we look at the 1 hour, we can obviously start seeing, okay, are we breaking through resistances? Yes, we are. And look at all the clean range which we have to trade in. The problem with this though is on the 1 hour, you can see that this will most likely not be clean traffic on the 30 minute. So what you need to then decide is, okay, if we're going to drop down to the 30-minute time frame, where can we find possible entries? Now, in my opinion, I think that due to this choppy price action, the safest move is probably going to be above this level, because if you look to the left above that level, it is very clean price action. If we look at our market structure, we are currently, if we get a candle close now above this 35166, then we are going to be bullish in market structure. So I would have that marked out, and the reason for that is obviously this is our low. We now look for a 2 or more candle pullback. That's right there. So we're going to need to get above 35160, and that's looking like that's going to happen on this 30-minute candle. So then I would certainly be looking for potential buys above this sort of 35405 level. I hope that does help out. Sells looking to the left, looks like it's even gapped over here, but that is just a liquidity provider. I'd say maybe if this is a clean candle, I would say sells below 34938. I don't really trade US30 though, so I haven't really been watching how it acts to this sort of price action trading. So you'll need to obviously make sure to wait for those candle closes, is what I would say. Trying to come up on GJ now, and gold as well. So just going to check out NASDAQ, because NASDAQ also got affected quite heavily by CPI yesterday. You can see we had this massive drop, and now we are what looks to be continuing bearish. Five minutes until this candle close, and then the range that we're going to have if the candle does close around where we are is going to be roughly 11 or so pips. So it is going to be, it's going to be tight to trade, but I'm hoping that if we don't push too far, if we push too far, then unfortunately the trade does become invalid, because then we have a resistance level coming up too soon, and obviously 30-minute resistance we are quite likely to respect. So what we'll then need to do is wait for us to slowly get above these sorts of levels. So maybe if we shuffle above those levels, and then once we get above this 157.422 level, I think that there's going to be a good chance of making a nice strong push. So that might only happen during New York. Again, lack of volume today, although it doesn't look like we have too much or too little volume in the markets. It is important just to remember that bank holiday. The sooner we get out of this no trade range, the better. Obviously that does look to be happening, but we don't really have the range to trade into now if we move too far up. What I do like is now we are forming this 4-hour support on this previous level of 4-hour resistance. So that is perfect. That's exactly what we want to see, especially if we want to retest this 4-hour high. Yeah, we are making that push right now. Very good example of making sure you understand your structural bias and having a structural bias as well. So for me, I wasn't at all interested in sells. Yes, if you're looking for 10, sort of 15 pips, these sells would have worked out. Obviously very high risk sells and very low confirmation sells. Now, for me, what I was thinking was, I know at some point during the day I will be able to possibly catch some buys if we do start respecting these levels of market structure. And that does seem to be exactly what's happening. I didn't take an entry here, but what I am thinking is later on throughout the day, we will possibly see these buy continuations above 157.422. And I will obviously be hoping and pretty confident in catching these buys. Whether we're going to base it on the 30-minute, 1-hour, 4-hour time frame is just going to have to, play it by how I see it. But I do see that that is a very strong possibility. And if you did take these sells and thinking, this is the beginning of the massive bearish correction, unfortunately, you need to understand market structure. Gold obviously would be very nice to get above 1827 as well, but we do seem to be struggling to do that. We are respecting that level of resistance. And in that case, we could just continue with this sort of bearish shuffle which we have going on down, and then possibly come up at a later point. But it's on sort of Fridays that you need to start looking at, I'd say Thursdays and Fridays, you need to start looking at, okay, based on the weekly time frame, where are we or like where are we currently rejecting, where are we sitting at. You can see based on the weekly on gold, we have more or less tapped into this weekly resistance level. That makes it quite likely that if we do continue this bearish sort of push towards the end of the week, that might be an indication that we have respected that level of resistance, and then that could be followed by a bearish week. So definitely worth looking at the higher time frames towards the end of the week as well. And if we're not going to respect that, then I would expect us to get above this level and then continue. If you are going to take buys or earlier buys on GJ above this 157 level and you aren't too worried about these sorts of levels of resistance, then obviously you are going to have an optimal price of entry if we are going to start retesting this 4-hour high. What you do need to realize though is that 30-minute and 1-hour resistances aren't, you know, a joke. They do hold strong, and it takes a lot of volume to push straight through them and not come back and retest them. So what would be the much safer option is just waiting for us to get into an area where we have a lot of range to trade into. So even though you might be seeing this strong bullish push and you might start thinking, well, I need to get on this sort of train now, it will be a lot safer and a lot higher confirmation for us just to focus on this area. So just keep that in mind. Otherwise, obviously, do whatever you want to do. Also coming up to the middle of the month now, so we should also by this time have an idea of how the month is going. If we are we chasing losses sort of thing, are we up quite nicely, and then that's going to base how the second half of your month you need to be looking at how you should be trading. Obviously if you're up nicely, you can start holding positions a little bit longer. That's certainly what I'm going to start doing, is looking for some much longer hold trades. So maybe try, instead of aiming for like 15 or 20 pips, maybe try, if we have this sort of range, try hold it a little bit longer. That's just because, you know, it's not one of those months where you're scrambling to make sure you come out of it in profits, you know. If you come to the middle of the month and you realize you're sitting break even, I'd say trade passively. Don't trade aggressively. There's no point in trying to chase a big second half of the month. Just keep doing what you're doing, but obviously then the problem is you're either over trading or not managing your risk. So if you're sitting at break even, that's usually, it's one of those two things: over trading or under managing. So you need to make sure that those two get sorted out as soon as possible, and that's going to be where you notice the biggest difference as a break even trader. If you're well down for the month, then obviously there's going to be a lot more factors to it. It's going to be both over trading, not managing risk, just probably incorrect technical analysis as well. Bit of a beginner trader, but I don't want to bother you with too many questions while viewing your content. But what is your view on the influence the most current CPI have on market outlook? Well, obviously based on the numbers, we had some really good numbers come in for CPI, which is why you could see that we did have quite a bearish sort of push, especially at the beginning. This bullish sort of move on CPI only came a bit later on as the news sort of stopped fluctuating a little bit. But I would say that, you know, based on market outlook, that's not really too important in the overall. You just need to mainly look at price action and how price action has been working and market structure. One news event isn't going to dictate how the market moves for the rest of the month type thing. What's going to do that is current market structure. So if we look at our higher time frame market structure, we were bullish in market structure since, I would say, based on the daily time frame, we've been bullish in market structure since the 12th of November. Now, what we need to understand is that doesn't mean we can't get those strong bearish moves. This was one of the best times to trade when we got these strong bearish moves, but that's when we had the lower time frame market structure as well as the weekly on our side. But if we're looking at the daily, what we needed to then understand is based on market structure, once we started forming support at these daily levels of support as well as the weekly levels of support, those are then opportunities to capitalize on, and then that's when you can get these really nice buy moves. And that's obviously going to come on the lower and the higher time frames. But in this situation, getting buys at these sorts of levels where we are respecting daily and weekly support levels, same as here. You can see that we respected that daily again, and look how easy these buys have been. This week has been really, really nice buys on gold. So yeah, that question seems more directed at a fundamental trader rather than a technical trader. Now, my understanding of fundamentals is, I would say, above average, but my technical analysis is at a much, much higher level, and is what I focus on mainly. I think to be a profitable trader, you need to understand both. Of course, you can't go in and trade purely technicals and ignore fundamentals, because if you ignore fundamentals and trade during a time of high impact news, you're just going to get destroyed by the markets. Whereas if you have a base understanding of both, but they're not amazing at the one, then you're going to be a lot better off. So if you're an amazing technical trader and you have a base understanding and progress that understanding of fundamentals and make it a good understanding, you're going to be putting yourself in a lot better position than if you are just ignoring fundamentals. We are coming up very well on GJ right now. So I just saw that price moving in the top left. The problem is, obviously, we have another 26 minutes until this candle closes. So I'm just thinking how to play this. Yeah, let's just be disciplined, not get too excited. It's also super important to remember, guys, that you can be the best technical trader in the world. You can have the best technical analysis. Technical analysis is not hard. Once you understand it and practice it, it becomes super easy, it's super repetitive. But trading at the end of the day is maximum, I'd say, 40% technicals. Probably it's only 20% technicals. The rest is purely your discipline and psychology. Trading psychology, I can make anyone in this chat the best technical trader they can possibly be, but that's still not going to make you a profitable trader. What you need to be a profitable trader is to be psychologically strong enough to let moves happen without wanting to get involved and not have greed, not have temptation. That's what you need to be a profitable trader, not technicals. Technicals anyone can do. And what's tough about psychology is it's very hard to teach. So like I can sit here all day and tell you, take 1 to 2 trades a day, trade 1 to 2 pairs, wait for candle closes. But as soon as you do that and you take a loss, then like you start to think, okay, no, this is a problem. Like I need to go back to my old ways. I need to be greedy again. But it's just purely patience. Do you know what to do when MetaTrader 5 isn't loading properly on iPhone? It should be. Let me just see it on mine. I use it on my computer, but let me see it. No, mine is working properly on my phone. I would say maybe just try restart your phone, maybe, Nick. It should be working. Sometimes, obviously, they do have like a system crash, but it wouldn't be working on mine then. And it's, yeah, if you're watching this, it's definitely not your Wi-Fi then. Just waiting to see a candle close above this level. What we also need to be very wary of is exhaustion, guys. Talk about this a lot. I think it's very underrated and not a lot of people do discuss it. But once we get very strong bullish moves, or even very strong bearish moves for that matter, we can then expect a little bit of a pullback and then to see that continuation. That is normal. So when you're taking trades based on, you know, you've had this strong move, you get the candle close, and then price comes down and then continues bullish and then comes down and then does your move like after you've predicted it to do your move, that is just based on purely exhaustion. And you just need to identify that. So we've made quite a strong push from the bottom here. Now, if we have enough volume, what's going to happen is we're going to manage to correct this move, which we had this bearish move, and we are going to correct this move to the top side. But if there isn't enough volume, what we can expect is exhaustion, probably on the lower time frames, maybe the 30-minute, the 15-minute, and then we can see that continuation. And normally in exhaustion, what you'll start seeing is on the lower time frames, these sorts of levels will become support. And then that's our indication that then we can continue bullish. So I'm just looking to see, based on the 5-minute time frame, how we are moving in this sort of price point. Hey mate, how are you? Good, thank you, and yourself. I'm from Australia. Just want to know, is it really true that one can make $1 million trading? Please be brutally honest. To be brutally honest about trading is you need to have a lot of money to make a lot of money. That's as simple as it is. Without a lot of money, you can't make a lot of money. And then obviously there's the whole actual trading side of it. So when it comes to trading, you base your trades off of your lot sizes and how much money you start with. You're not going to make $1 million if you start with $1,000. Like, that's just, you know, these people who come into the industry thinking they're going to flip their $200 account into millions. It's just unrealistic. Obviously, if you have enough money, you can make a lot of money out of it, but then that's completely separate to the actual part of being a profitable trader. So you're only going to make a lot of money with your lot of money if you then are disciplined enough and good enough at trading. So that's a whole separate sort of thing. If you can be disciplined and understand technicals and psychology, of course you can make $1 million doing trading. All you need is the capital to start with. You definitely, even no matter how good you are, you can be the best trader in the world, but if you don't have capital, you can't make huge amounts of money. If you're starting with, let's say, $1,000, you're not going to make $1 million in the next few months. That's just unrealistic. Those returns are unheard of. So it's just being realistic. I mean, if you can focus on making 10%, 20% a month based on what your account size is, go for that. That's also really good. There's 10% of traders who can actually do that. Other 90% are sitting in break even or negatives. So yeah. I hope that does answer your question. And yeah, I definitely am not a believer or one of those people who will tell someone that, you know, bring me your $500 or your $1,000 and I'm going to make you, I'm going to get you your dream car. We always joke about it on this channel, but that's the truth. You're not going to get your dream car in the next 2 weeks by just looking at Forex charts and clicking buy and sell on your MetaTrader. Unfortunately, if life was that easy, I think everyone would do this. But what you can do is learn how to do it properly, get a proper mentor, and focus on 1 to 2% a day. I mean, even if it's 1% a day, that's still, you're going to be trying to get 10% a month. And by the end of the year, you're going to have done 120% on your account, which is continuously compounding. So that's obviously going to be more than double your account than what you started with. So let's say you start with $10,000. By the end of it, you're going to have probably close to 30,000, because obviously, because it's compounding, even though you're doubling it, it's going to be more than double because it's compounding. But that's if you trade correctly, stay disciplined, 1 to 2 trades a day, 1 to 2 pairs. You know, just need to line it up. Still waiting for this candle close, guys. We've got about 18 minutes. Just gonna see how it moves. May possibly stay until this candle close. I think, yeah, so probably until 11 o'clock my time. So that's about 15 or so minutes. We can wait and see how this goes. If you guys have any more questions, want me to check out any more charts, do any chart analysis for you guys, I'll happily help out. And yeah, I do enjoy answering these sort of psychological questions and like clearing out the myths of Forex, because there's a lot of them, and there's a lot of bullshit in this industry. So it's good to get a a pretty realistic sort of answer on it. What is a lot of money? 100k. I think I'm 34-year-old lawyer. I'm around 105k. Options trading. Stay away from binary options. That is truly gambling. You good, thanks. Please kindly answer. Okay, so a lot of money. I mean, trading, what you need to put into trading is exactly what you can afford to lose out of it. I certainly wouldn't say put your rent money or like your mortgage money or paying off anything sort of money into trading. That's just, you don't want to be putting that pressure on yourself. What you want to do is put the money you can afford to lose into trading, however much you can afford to lose, and not just lose once, maybe lose 2-3 times over, because then you know that if this does not work out for you, and if it isn't for you, you haven't lost the amount of money which is going to, you know, put you under financial strain. So by the sounds of it, if you're a 34-year-old lawyer, you probably do have your finances in check, I would hope. If you have $105k lying around, I would say that is, you know, more than enough to start with. I certainly wouldn't jump in with all of that. I would learn how to do it first, maybe start with a tenth of that, see if you can, because like I always say, I've been talking about it a lot this week, if you can not do it on a small account, there's no way on earth you can do it on a big account. So if you can't trade a $10,000 account, there's zero chance you'll be able to trade a $100,000 account. So what I would say is start with a tenth of that, trade the live account, because if you can and have the capital to do it, trading live would be the best practice you can get, trading a live account, because then you obviously learn that emotional attachment, or you try to get rid of that emotional attachment to the capital right from the beginning. So yes, $105,000 is definitely enough to start with. You can make really good money out of that, but if you don't know what you're doing technically and psychologically, you are not going to make any money at all out of that. So yeah, hope that answers your question as well. We are trying to come up here. Thank you. Yeah, no problem. No problem. Gold obviously still respecting this. It looks like we might even form that 1 hour resistance. If we get this nice 1 hour candle close on GJ above this level, I think that we could be seeing definitely some more bullish continuation. That would be really nice to see. I'm obviously quite interested in maybe seeing a little bit on the lower time frames of a little minor pullback. So maybe on the 5 minutes, if we get that 5 minute pullback and then we can see that overall bullish continuation, that will be perfect. You'll definitely find me in that, but we got to wait for this candle. This candle does need to close bullish. Sorry, not the 5 minute, the 30-minute candle does need to close bullish. So we do have 13 minutes left to go. And then obviously what I'm going to be looking for, guys, with this following candle, let's say we do get a candle close at this current level, what I want to see the next candle do is wick down. That wick down is then going to be a retest on the lower time frames of this level over here. So I want to see the next candle wick down, retest this resistance, so form some support on that resistance, so that's your break and retest. and then my entry is going to be at the break of this candle high, and that is going to be your hopefully your break and retest confirmed. So just keep that in mind. I am going to be a bit wary of exhaustion and a bit worried about exhaustion. What do you think? Has anyone made millions? Like, people here lie a lot and say things like they have 150,000 trade index and make 10,000 a month as they are pro, but quite confused. Of course there's people who make millions trading Forex. I mean, you look at Roger Banks, for example, who has made, I think last year he did 2 million from a $50,000 account. But okay, look, he is arguably one of the best traders in the world. I would say he's definitely top 3 in my opinion. He does it all live as well, which is great. Transparency in this industry is very, very scarce, and for people to be transparent, I think adds a lot of validation. So that's why I say often people who trade live, on YouTube, doesn't even have to be YouTube, any live streaming platform, I think it adds a lot of validation, because you're taking trades live, you're showing people how to do things, you're showing people how to manage risk, and essentially how you analyze a market. So yes, there's certainly people who have made millions in Forex, that is for sure. Indexes, okay, a lot of people who advertise how much money they're making trading indices such as NASDAQ or US 30 are often bullshitters, that is for sure. The country, where I'm from, South Africa, there are a lot of traders here who, they show these 0.01 lots, and it's like completely photoshopped photos. I call them master marketers. They're definitely not traders, and all they do on Instagram is post pictures of cars and stuff like that. That's not trading. That's just them paying off cars with subscription money and signals money. Often people who offer a signal service are also not legit, because they're making their money off of the signals rather than actually trading themselves. So I would say stay far away from signals, stay far away from things like even copy trading. Copy trading is not ideal. Just learn how to do it properly yourself. That would be much, much safer. What is his name? Raja, R-A-J-A. His YouTube channel is Wickstone Lie, and he is he's definitely one of the better traders. I think one of the best traders. Yeah, that's the one. There we go. Zeem's put his name in the chat. And yeah, his YouTube channel is Wickstone Lie. Sorry, and I also didn't answer in your previous question, options trading. So if you are trading things like binary options, you may as well go to the casino, because that is purely just clicking buy and sell based on a time. You say, okay, within the next 30 minutes, price is going to be above or below this price point where I'm entering at now. So it's a pure gamble. You don't even manage risk. It's what you put in. If the price is not above that area, you lose all that money that you put in. And if you get it right, you double your money. So it is gambling, more or less. So I'd stay far away from that. Trade Forex. If you're going to trade Forex, do it properly. Do it this way. Trade on MetaTrader, trade currencies rather than, things like binary options. Yeah, the Forex industry certainly doesn't have a good reputation. There is a lot of frauds and a lot of scammers in this industry. So I definitely understand literally every single person that's ever questioned it. I completely understand it, because it's people make it seem too hard. Too good to be true, and a lot of the time if things are too good to be true, they are. And that's exactly the situation when you go onto Instagram and you see these people. I will never ever message someone else saying, sign up for my course and I'll make you this amount. But I get those messages, I think, every day or every second day. someone trying to sell me a course. And you go look at their Instagram page, and it's 100,000 bought followers because their photos get about 20 likes, and it's just pictures of cars, clothes, and yeah, jewelry. So those are the sorts of things I would stay far away from. Got about 7 minutes. If we do close like this, it'll definitely not be ideal, but we could be getting our exhaustion. So I just want to see on the 50, if we're going to base it on the 50-minute time frame, we need to either respect this resistance level, yeah, maybe tap into that. That'll also be some nice exhaustion. Robbie, welcome, welcome. From Australia, got a few Australians, or have had a few Australians. I think Troy's also from, oh no, Troy's from the US. Like the way you answered before, appreciate that, thank you, thank you. Just got, like I said, in this industry, all you need is transparency, and don't promise anyone, you know, I'll make you X amount in this amount of time, because that's up to them, it's not up to you. I can teach you how to understand charts, but then again, like I said, you need to psychologically be able to understand how disciplined you need to be to make money in this industry, and understand you need money to make money. But I do think it's super important that most people start on small accounts, because if you are, yeah, I already talked about it earlier, but if you are unable to manage a small account or grow a small account, even if it's $100 account, and grow that into, let's say, you know, a $300 account, that is a really good return. You've doubled your account. Then I would say you're ready to move on to bigger money, and then that's when you can start thinking about, okay, I've been consistent for, let's say, 6 months a year, and I've consistently done 10% a month, maybe some months even better, 20%, 15%. Then you can start thinking about, okay, now should I try and gain some capital to really pump into this, and then be up in your lot size because your account size can handle it. So yeah, I definitely think that that's the sort of approach you need to have. Just try it out with a small account, try trading out. Once you understand the technicals and fundamentals, try it out with a small account. Make sure, you know, obviously if it's your first week or first 2 weeks, that's fine to trade on demo. But once you get past that, I urge you as much as possible, trade with real money, even if it is just, you know, a few $100s. As long as it's real money, you need to get used to that psychological attachment to your actual money, because, you know, when you lose $1,000 on a demo account, it means absolutely nothing. But when you start losing your actual capital and your actual money, you'll start seeing how hesitant you get to even entering trades. You don't even, sometimes if you go on a losing streak, you don't even want to look at the charts. So yeah, thanks for the stream, viewers, no problem, easy. Thanks for being here, welcome. Hope to see you again. I don't think we're going to get the candle close we want to, guys. We do only have 3 minutes left, so I'll probably be wrapping up around now. For anyone new here, I have seen a few new names today. I do stream every London session every day, so that is normal. If you guys aren't part of the Discord, I have copied and pasted the Discord link in the chat. Sorry, just scroll up a little bit, it's not too far up there. Join that. I on Tuesdays and Thursdays do live Discord calls with some of you guys. It will be open, so feel free to join that, and it's a nice way that I can interact with you guys and actually talk to you guys and answer any questions you have there. If you're not part of the Telegram, join that. The link is in the description. If you don't have the app, just download it. It's free off the App Store or the Apple Play Store. I'm not too sure what the Android one is. So yeah, I do appreciate as well all the support. If you guys haven't already, please leave a like on the stream, and I can then be happy. And subscribe if you aren't subscribed. I'd appreciate that as well. And I hope everyone has a great weekend. I will probably be chatting in the Telegram throughout New York, and I'll maybe post a couple of charts in there. We can see how it goes. Antonio, thank you. And yeah, have a great weekend, everyone. I will chat you guys in the Telegram. And again, yeah, I appreciate all the support. And I'll see you guys all Monday morning, exact same time. Cheers. Yeah, thanks Stanley, Balas. Robbie, can you tell me how you got these levels? That's, you're gonna have to go back in the stream. I'm sorry, I do have to go now. But if you go back in the stream, I did full chart analysis on both GJ and gold, so you'll be able to find that. Stanley, thank you. Nick, thank you. Ethan, yeah, Zeems, appreciate it. Plus, thank you guys. Antonio, appreciate it. Cheers.